Hey guys, good afternoon, everybody. It's 2:02 right now. We're going to be starting our group mentoring session shortly. Let me just get this room set up and then get started. Get this link sent out to you guys in the premium. So let me get this over to you guys right here. All right, cool guys. Good afternoon, everybody. People are still making their way in, so I'll give it a few more minutes. It's 2:03 right now, so it's still pretty early. Looks like people are still joining into this. Hey, Matt. Yeah, definitely, man. I'm glad to help you guys out here because I know this is good to clear up any confusion for you guys. Obviously, a lot of the strategies are still in work, specifically the variation strategy. So once those are all done with, I'll just revamp all the videos and I'll add videos for the confluences, checklists, and stuff like that to help you guys understand it a lot more. This is really where like most of the value comes from because the course teaches you like the very bare basics of like what you need, what the indicators do. But these mentoring sessions are really what help everyone dial in with regard to applying these strategies real time, because that's really what it is. It's applying it versus just cookie cutter checklist type stuff. Yeah, no problem, Mauricio. I'm glad to help you guys out with this because I know you guys do. This does make a huge difference for a lot of people who actually want to learn, the whole thought process behind all of my trades. Man, I hate these water bottles. They always leak. Let me fix this. All right, so I'll give it a few more minutes. If you guys have any questions, feel free to drop your questions in the chat now. And then we'll be going over the questions in order. So these questions, this session is going to go on for as long as we have questions. I want to make sure everyone gets all the help that they need. And then we could clear up any confusion. Fahad said, I really need this today since I missed last week. Need to understand the V3 more. So thanks again. Yeah, definitely, Fahad. I'm glad I can help you guys out with this. I think that most of this session is probably going to run around the V3. That's what most people are interested in. So I think we'll definitely be looking at that stuff for the most part today. Let's see. Mauricio said, does Isaac have a secret sauce for the V3, or is it the same as you outlined? So the thing with Isaac is I don't think he necessarily applies just the V3. He applies like all the variations. The thing that I helped him with, I don't think Isaac is here, but yeah, the thing that I mainly helped him with was identifying where to put his stop loss. Because the thing is, he was doing the 300 pip stop loss, and then he asked me, if you were in the other session, Isaac actually asked me, if there's anything different that he could do with regard to a stop loss. And I told him that I generally make it a bit wider, especially now when the market's moving too fast because volatility is pretty high. And he changed his stop loss to like 400. I think he just uses like a flat 400 stop loss, and then he pretty much trails his trades. I think that's mainly what he does. He trails all of his trades. That's why you can kind of see from his let's see. Isaac. Because if you look at his trades, you could kind of see that they're not always the same, like with regard to his profits. His profits kind of vary from time to time, where sometimes they're like 600, sometimes they're 400. I don't know exactly what he does with regard to his TP, but his TPs aren't always the same. They're like sometimes they're smaller, sometimes they're bigger. So he generally it seems like what he does is he trails a stop loss as price moves down, because sometimes they'll have like the bigger profits here where they run farther down and he just pretty much rides them. But I think, yeah, pretty much he just sees a variation and he trails them as they go along. I don't know exactly what he does. I haven't talked to him directly about it. He's given, you know, everyone here kind of hints of like what he's doing, but I think he's doing things differently with regard to each trade. I think he does it, it's case by case, you know, because he trades Asia, he also trades London, and he trades New York. So volatility is different from period to period. And that's for the most part what he plays it out as. But, you know, obviously I don't know. We would have to ask him on this live if he's on here. I think he's probably at work, so he's not on this live right now, but eventually. So let me see if there's anything else over here. So, let me just respond to some of these questions right here real quick. All right, looks like these questions are answered. Let me scroll down the list over here and see what's going on. Hey, what's up, Maddie? Actually, I don't know if Isaac works. I think he just does. I don't think he necessarily works. I think he just does other stuff. Yeah, I know exactly. You know, I don't know if he works. I think he's self-employed too, so I'm not sure what he does exactly, but I'm pretty sure he does something else on the side. Hey, Patricia. All right, let me scroll down real quick and see what I missed here. So I think I went over Mauricio's. Matt said, I'd like to hear how you determine whether you take a valid setup that shows up or pass it by. So it's kind of hard to go over exactly what I'm looking for, Matt. I mean, obviously, you know, I look for different confluences. So the more the confluences, the better. There's nothing that's clear line exactly like whether I would take the trade or not. You know, a couple of the red flags that I always mention is if the trade's near these sessions, I generally don't trade around these areas. Another thing that I try to avoid the most, well, I think for the most part, that's pretty much it. It's going to be the sessions. Because lately price has been around the sessions like pretty much all day. So you guys can see right here, it's been around the sessions a lot for the past couple of weeks. So that's the main reason why I skip them. Sometimes I'll skip them if like the sentiment is super high. Right now, it hasn't been super high. It's only at 55%. But if sentiment is like at 60 or 70%, then obviously I'm not going to trade in that direction. So, I mean, it's case by case. Like you'd have to show me an entry and I would explain, you know, why would I take it or why wouldn't I take it? There's no guaranteed way to check whether it's going to be, you know, a guaranteed hit or not. It's just the more confluence you have, the better the trade. So if I have confluences where the retail sentiment lines up with the fundamentals, those are like the two big confluences. If price is next to a sessions, I'm probably not going to take it, whether they line up or not. So there's, yeah, if you could find one for me, I could look over it, but it's probably still not going to work during the session because the market's not even open. Like right now, the market's closed for the swap. And also, if you wanted me to check right now, I can't check to see back where the retail sentiment was during that time or the fundamentals because the market's not open at all. So I don't think it's really gonna be possible for you to find one because, you know, obviously everything takes place. So like, I think the main thing that you can do, Matt, is go back and watch the live sessions because in the live sessions, I explain exactly why would I take a trade or why wouldn't I? But the main things here, I could kind of make a list for you. Let's see. So, I mean, I don't want to call it a checklist, but this is probably, it's the same checklist for everything. It's not just for V3s, but it's for everything in general. So trade probability checklist. So, I mean, first you always look at check retail sentiment. Does it match fundamentals, right? Check fundamentals. Does it match retail sentiment. 3, check if entry is near previous session's high low. Trying to think if there's anything else that I really look for here. Maddie, I don't know if you could think of anything, but I think those are the main things. I don't really see anything different there because we don't really look at the trend. Or I mean, you can. So like there's different things that you can check. You can check, or that could even be, this could be 4 actually. 3 is going to be check technical analysis. Does it match retail sentiment? Fundamentals. So like the question that I get all the time from people is the same question that Matt asked, right? It's not just for the V3, but I get this question every time for any strategy. The checklist never changes. It's always been the same from day one. Fundamentals, fundamentals. Yeah, so the checklist never changes. It's always the same checklist as it's always been. So nothing changes. It's, you check retail sentiment. That's always going to be number 1. Second, you'll check fundamentals. You make sure that they match. Usually if they match, then you're trading in a proper direction. Third, you want to check technical analysis. You want to make sure that it matches both retail and fundamentals. Fourth, you might want to check whether it's near the previous session high lows, because basically there's one or two ways where price can go. Like for example, right here, when price reaches, I'll just rewind to this place here. Okay, so if you get an entry that's close to the sessions, price is going to do one of two things. It's not just going to go sideways. It's going to either bounce off it or it's going to break above, right? So you're basically taking a gamble if you're trading near the sessions. That's why I never trade around the sessions. I wait for it to break away from it or bounce off it, right? Because for example here, price broke through it right here, but it doesn't necessarily mean it's going to keep pushing up. You can see right here, it comes back, retest. So there's no clear direction, right? But eventually price is going to push away one way or the other. So pushing it forward, there you go, and it pushes up, right? It doesn't always happen that way. Sometimes it'll just bounce off and come right back down, kind of similar to what happened right here, right? So price reaches that point, then it does one or the other. There's no guarantee of knowing which direction it'll go, but it'll go one way or the other. You can see right there, it came down. So 2 different examples here. Right here, it bounced off, came down. Right here, it broke through and pushed above. So that's why I never trade around the sessions. That's why there hasn't been really many entries lately, because the price is always around the sessions. So you're basically gambling at that point. You basically want to trade away from it, not where it's at. Because the thing is, you can anticipate it to bounce below and it'll come above and you'll lose, or vice versa. You think it'll break above, but it comes right back down and you lose that way as well. So there's different ways to look at it. But I mean, for the most part, you're better safe than sorry to just avoid trades near the sessions. So those are pretty much the things I look for. And it doesn't change, from whatever strategist, right? It's not required that you have to look at those checklists, but it obviously helps with determining your possibility of, the trade hitting or reaching your stop loss. Exactly. Yeah. So, and also Rick also confirmed an open. So there's different things to look at. There's going to be sessions. There's going to be opening price. There's also going to be, if there's news that just happened, like, how Rick called it out earlier, where price comes back. Like, for example, let's see, what time was news today? I think it was at 7, right? Yeah. So there's news here at 7. I think the 1 minute is probably a better chart to look at. See. All right, so going back to like 7 o'clock, and I'm just going to show you, because there's different areas to pay attention to when price drops. Okay, so news happened right here at 7. Let's clean this up. News happened on this candle, right? Which was right there. So before the news happened, price was up here, and then it came crashing down. If you go around this point and price comes back to that area, it's the same thing. It acts as a session, right? So same thing right there. Price gets near any of these sessions, or if it's anywhere near opening price or anywhere near news, I usually avoid that area because one of two things will happen. It's just an area of high manipulation because there's a lot of pending orders around there. You know, price will bounce one way or the other. So definitely something for you guys to look at. But there's no cookie cutter like check this off, check this off, check this off, and then it's guaranteed to hit. There's no guarantees ever with trading. So it just depends on like how many confidences you have and whether you're looking to take a risky trade or not. Because I mean, you can get lucky here and take the bounce, but in some instances, you can probably anticipate it to break above and then still take the loss, right? So different things to take into consideration, but for the most part, checklist is always going to be the same. Yeah, and Randy said it doesn't always have to hit to do it as well. Yeah, you can get somewhere near it. Like for example, let's see. It actually hits there. I'm trying to see like where it gets close to it, but it doesn't actually touch it, but it still bounces off. But you can see right here, every time price comes around, it doesn't necessarily have to touch it. It can come near and still bounce off. Kind of similar to like what happened down here. Like price didn't get all the way down to the bottom, but it got pretty close to it right here. But then it still came all the way back up. So, I mean, basically you want to keep a distance away from it. Like you don't want to take any trades that are going to cut through it. Like for example, if you're entering a sell here and your TP is below it, you definitely don't want to take this because price can get close to it and still bounce off it. So always something to keep in mind. Other than that, let me see if there's anything else here to look at. But yeah, Matt, if you have a specific entry where like you probably took the trade and you lost it, then we can probably go back and look at it. Like one thing that you guys can do as well is if you guys are back testing, because I know a lot of you guys like to back test, one thing that you guys can do is you guys could always go on the YouTube channel and say like you're trading on January 31st and you're wondering what the sentiment was during that day. You can always go back to, you know, the live session, and then you can just fast forward to my analysis there to see where the sentiment was sitting, because I go over to the sentiment every day. So if you're wondering where sentiment was or fundamentals were that day, just go to the live session for that day, and then you can take a look at, you know, what the fundamentals were, and then you can use that for your analysis. Because I think the main thing with backtesting that you guys can't really look at would be the sentiment and the fundamentals, right? That's going to be the main thing that you guys can't backtest because it changes. Everything else you can check because it doesn't matter where you are in the market. Like you can replay it anywhere, and the sessions are going to be there. Sessions will be there. The trend will be there. If you turn on the trend meter or the pivots, like nothing really changes. The only thing that's really different there that you might need to confirm would be the fundamentals and the retail sentiment. One thing as well is news. So if you guys want to go back and check the news, you can always go back to the specific date. You can click on this right here, and then you can choose the actual date. So, I mean, there's a lot of ways to backtest it to figure out, you know, what could have been differently, what could have been changed. But so Matt's asking, yeah, there's no way I could check that, Matt, because you're asking for the trade at 11:45, but I don't know what the fundamentals were at that time. You'd have to check for something that's, you know, that I was live at, so I can actually see what the fundamentals are like. Yeah, because I can't go back in time. Like you can't go back here and be like, okay, what were fundamentals at 11:45 at the time? Like there's no way to do that. You would have to know what the fundamentals were like, because I can't, I wasn't trading at that time, so I wouldn't know. But if you had a question regarding a trade during, you know, New York session or something like that, then we can always go and check, because the live session pretty much covers all that stuff there if you ever wanted to go and back check it. Other than that, let's see. All right, so I think that's it with your question there, Matt. I know unfortunately we can't go back and back test like specific times that I don't have, the fundamentals and retail sentiment for. But yeah, I mean, if you ever want to go back and test it, you guys can always go check. But the checklist never changes, Matt. So you can always go back and see. Rick said, Matt, screen record market sentiment and review it that way. I mean, I wish we could go back in time and check, but it's just, it's a lot of work to go back and check that. It would be cool though if you can go back and check it. Yeah, it's not worth the effort, man. I think you're better off forward testing than going back and back testing what happens. So let me just scroll up real quick and see what's the next question. So if you guys are asking questions, I'm going in order. So if you guys are asking questions right now, like Rick, I see you have a question there. I'm not going to get to your question until later because we're going down the list. So I'll come back to your question when we get to that point. But let me see who has the next question here. The next question is from Janae. She's asking, what's the ideal percentage to set lot size? I mean, it depends on your risk, Janae. Are you trading risky? Are you trading conservative? It's really up to you what would be ideal for you. Ideal would be 1% to 3%, but 1% and 3% are very different. So if you're trading conservatively, then obviously 1% would be good. If you're trading risky, 3%. But I wouldn't go anywhere past. And it also depends what type of account you're trading. If you're trading FTMO, you obviously don't want to go over 3% because your max daily loss is 5%. If you're trading your personal account, then you can go up to 5% because if you're trading personally, you're usually trading, a smaller account size. So you'd have to risk more to make more, or, vice versa. For FTMO, you're pretty much capped at like 3% because you want to keep that cushion in case you do lose a trade where you won't reach your daily loss. So if you could be like a little more specific with like what you're looking for, what type of account you're using, then it's going to be between 1 and 3. So if you're conservative, then 1%. If you're more on the riskier side, 3%. But I wouldn't go anywhere past 3. And I definitely wouldn't go anywhere past 5. That's too risky. Yeah, no problem, Janae. It just depends on you, right? Everyone has different risk parameters. I mean, for me, I'm like more on the conservative, riskier side. So I usually trade about 2% per trade, 2 to 3%. But that's because I'm confident with the trades that I take. So it's just really up to you how you want to do it. Let's see, scrolling up real quick. Yeah, no problem, Jenna. Let me scroll up and see. Next question is from CD. CD is asking if Isaac trailed his trades, then he would have a stop loss thing though, right? Yeah, I mean, initially, like I was mentioning before, Isaac usually uses a 400 pip stop loss, but if he trails it, it trails along with it. I'm trying to understand what you mean by, because he said he would have a stop loss thing though, right? You should always have a stop loss. I don't recommend anyone trade with no stop loss. I've seen Isaac mention that he doesn't use a stop loss sometimes, but he's like on the chart, like he's following it, and he's not necessarily CD said, no, meaning it will show a stop loss icon on his MetaTrader. If you have a stop loss up, yeah, the stop loss icon will be on there. If you don't have a stop loss on, then it's not going to show up. So if you have a stop loss, whether it's a trailing stop loss or a regular stop loss, it'll still be on there and it'll be trailing. So here, let's see. So Matt said he may just trail it just in case a spike comes, but he manually closes every time CD. Yeah, so yeah, like what Matt said. I mean, even if you have a trailing stop loss, you don't have to let it hit your stop loss. You can always just close it out. So like what Matt said, Like for example, like say if you're entering a sell somewhere here, right? So like for example, if there was a sell right here, and say this was your entry point, right? Like say for example, you entered right here, and his stop loss was initially up here. If price drops lower in profit or anything like that, he can, move his stop loss manually. And then as it drops lower, he can move his stop loss manually. But if he wants to close out, he can always close out whenever he wants. He usually has a number that he reaches. So he can just close it out whenever he wants. Like for example, here, if he thinks price is going to spike up and stop him out, he can just close it out manually. Everyone does things differently. I don't know how he does it specifically. I think this is a question you guys should be asking Isaac, not me, because I don't know what he does. So I can't really tell you guys exactly what he's doing. But I'm assuming that's what he does because his profits here are, let me go real quick. Let's see. Yeah, because I don't see any strips on his trades here. Like, or I don't know if he just doesn't. Like I've never used it on a white screen, so I don't know if it looks the same. Let me see if anyone else here has. No, so it should still have the strips there. Unless this is his copier. So one thing that you guys want to keep in mind is that this might be his copier account. So that's another question to ask him directly, not like through me, because I don't know what he does. But this is probably his copier. Because like for me, for example, like my trades here, my main account has the strips right here, but my copiers don't have any strips. This doesn't mean that I'm closing them manually. They're just on my copier. So, and I think that's like something that's not very important anyways. Like it's not really a big deal whether he's using manual exit or letting it run to stop loss. But yeah, I mean, this is something that you guys should probably ask Isaac, not me, because I don't know what he does. But yeah, no, I mean, he's doing good. So he's doing something right. So let me go back to the questions. Let me scroll up and see what else we're missing here. Let's see. Rick said, hey, can you test this version 3 1 minute? But by going back on replay, I was trying to back test it not on replay and won a lot, barely lost. But when you go on replay mode, you see all the highs and lows in real time that don't disappear when they're broken. Win rate goes down to, so I'm not sure how far you went back, Rick. I'm pretty sure you didn't go back far enough to really get a real good sample. Because whenever someone says they back tested US 30, you probably didn't go back far enough because it takes a long time to go pretty far back. Like for example, if you were to back test it right here, or even just go back as far as you can, the date only goes back to, let's see. The date only goes back to, well, I mean, depending on how far you replay it to, because it goes back like less than a month. A month is not a good sample. Like you can't just base a whole strategy off January. January is like one of the riskier months to trade it because it's a brand new year. So for you to really back test it, you have to go back years and years of data. So like, for example, right here, it goes back to like January. And the thing is, this strategy is not even meant for the 1 minute. So, I don't back test anything. I never back tested the strategy. Everything's been forward tested. So I can't really tell you what the back test data is. It only goes back to January 9th. It's less than a month. So it's not a strong sample for you to use to determine. And I'm pretty sure you didn't even go back this far, because if you went back and you back tested it literally from January 9th and you just went forward, there's a lot of things here, like other factors that played in part, right? Did you factor in when Biden was speaking? Did you factor in when it was NFP? Did you factor in when FOMC was going on? Did you factor in when Yellen was speaking? There's a lot of different factors. So if you're doing a back test and you don't even take the other stuff into consideration, you got to keep in mind that these trades, you don't just trade every single entry, right? Like when Biden's speaking, we don't trade when FOMC is going on, we don't trade. So in order for you to get a real back test, you have to actually put in some work. You can't just like take every single trade here. And also this strategy is not meant for the 1 minute. So I can't really tell you what the back test would look like. So I would, let me go back to your question. So I don't know how far you want me to go back, Rick, because you're asking me, hey, can you test this on the V3 1 minute? So if you're asking me personally back test it, I'm not going to do that. That's too much work and it's too much time. Like I'd rather just forward test it. I don't need to back test it because every time I use it, it works well, right? Because I use my confirmations. If you want to back test it, you can do that. You can pull up an Excel sheet, back test it, and then, I can tell you what parameters to probably put in it, but I'm not going to waste my time to back test it when like it's not meant for the 1 minute. So let's see. Yeah, CD said there was a lot of losses with the V3 in the last hour on the 1. So if you're looking the last 2 hours, that's probably the worst time to trade in general, CD, because that's when the market closes. Usually don't trade right before market close, because if you traded in the last 2 hours or 1 hour, the market was literally closing. That's like the time that you definitely should not be trading at all. Like I always remind you guys not to trade from like 12 to close. So if you're looking for trades around this time, this is obviously you're going to run into losses because the market doesn't move smoothly during the last 2 hours of market close. I feel like a lot of people don't remember that. I always tell people not to trade, during certain times. Like I only trade from 6:30 to 8. If you go and back test from 6:30 to 8, I'm pretty sure you'll find good results. If you trade between market close over here from, let's see. So you said you traded like the last 2 hours. The last 2 hours is, yeah, I mean, you're not going to find good trades here because this is when market closed. Kyle said, I honestly don't see losses on the 1 minute. LOL. I mean, yeah, I don't know. I guess some people have like different, here, let's just back test it. Okay, let's back test it and see. Because so for one, I would never trade around this time anyways to begin with, because this is market close. Market closes here on like 1:30. Sorry guys, give me 1 second. I have to all right, sorry guys, I just had to answer that text right there. So here, let me see if there's anything. Okay, here, I'll just go back and look at it. But in general, I wouldn't trade during this period to begin with. I always recommend that you guys don't trade before this. I mean, I send the alert when not to trade during the swap time, but whatever. Let's go back and just check real quick. All right, from 12, let's go forward. Okay, so we have a buy signal here. You're basically looking for a sell now. Let's see this over here. So yeah, it looks like there was probably a loss right there. Check. But I mean, this is the main reason why you wouldn't trade around this time period. But also the TP stop loss is too close. Like even during the live, I always remind you guys, if it's too close like this, I generally don't even take it. Because like if you're trading around 12 guys, your spread is probably going to be super wide. So if your stop loss is at 130, your spread's probably up over 100. So even if you just enter this trade immediately, if he goes into any drawdown, you would have lost the trade already. So it's like automatic loss. Let's see. So I wouldn't even have taken that trade there because it's too tight. This is why the strategy is not meant for the 1 minute, because your stop loss and TP will be too tight. So you won't even be able to really have any leeway within your trade. So we'll just mark this up here. Let me see, we'll have this as a red, just so we can identify, or I'll put this here, let me see. Okay, so 0 wins, 1 loss. So let me go forward a little bit. All right. So again, right here, 25. I think this is still kind of tight because the thing is, when you get closer to the swap, guys, your spread gets really wide. It's going to be over like 140 pips. So even if you were to take a trade right here, like say if you enter to sell right here, you're going to enter this like way down here already. Like you're going to be down here for like way big of a loss. Like you're going to be in drawdown super before you can even get anything up there. So there's another loss right there. So I think the main reason why you guys are taking losses here is because you're trading when you're not supposed to. You know, nobody trades around this period where you get close to the swap. And, you know, another reminder, this strategy is not meant for the 1 minute. So if you guys are trading, like there's like a lot of red flags here. For one, you guys are trading like near the, you guys are trading near the swap. You're also trading where the TP is too tight. Like guys, like TP is 140 pips or stop loss is 140 pips. Your spread's probably more than that. So this right here. That hit TP. So 1 win, 2 losses. Let's see if there's another one. So this wouldn't have been an entry because this would no longer be the high if this pushed above it. So we would have skipped that one. Let's see if there's anything else here. No entry there. Still looking for sells. Let's see this right here. Oops, wrong one. So, I mean, just looking at all these trades here, guys, these are trades that wouldn't have even been taken because they're all like about 150 pips. It's impossible for you to take any, to even like catch anything here because your spread's going to be 100 something pips anyways as you get closer to market close, which should be right here. So another one right here, that would hit TP. So 2 wins, 2 losses. But I still wouldn't have taken these because they're too close to the stop loss is just too close. Again, right here, this would be a buy. Let's see. Again, right here, same situation. I mean, these stop losses are just way too close. Because the thing is, you have to factor in spread, but this one would have been a win too. So, and the thing is, if you're doing all of these properly with a 1-to-1, you would still be in profit. So again, right here, let's see. It's probably gonna be the same situation. Yeah, same thing. Your stop loss is just too tight right here, so you wouldn't be able to take these trades. But I'll go through them. I'll just show you guys. So yeah, okay, another loss right there, but that was obviously gonna be a loss because it was TP and stop loss are too close. That's why we trade this on the 5 because you have a bigger range. Again, right here. I don't think anyone trades around this period. Even Isaac doesn't. He trades it during Asia, London, and New York morning. So I don't know who does trade around this period. Let's see. See this again. Yeah, so as you guys can see, the stop loss is too close. This is why it's not necessarily meant to trade on the 1 minute. If you look at the entries that we actually took here, like for example, the ones at like 6, right? So let me show you an example of one that like this one right here. This is one that we actually took. The difference between this trade and the ones that you guys are looking at is that we have like a 47 pip stop loss, a 470 pip stop loss. So huge difference there because you have a big range to take these trades here, right? Comparing it to the trades that you guys are looking at around noon, because that's when the volatility dies down, it's not going to be a good trade to take because for one, the stop loss is too tight, two, spread's too wide. It'll probably hit your stop loss before it even hits it because your spread's so wide. All right, let's see what else we got here. Let's try to look at a couple more. So let's see, there's another one right here, but this is one that I wouldn't have taken because this is a little bit of a better trade because you can see that this is now not 150 pips, right? This is like 35 pips. You got a lot of space here, but you can see that it's right next to the New York high, right? So when it gets to that point, it can bounce off. So I wouldn't have taken it, and you can see right there that it didn't even make it above. So that would have been skipped. But yeah, that would have been another loss. But still around that point, it's still going to be around even. Let me check over here real quick. Nothing right there. Market would have closed right here because FTMO closes around like 130 or 120, I think. So 120 is right here. Another one right here. But this is so close to close that I wouldn't even recommend taking it. Again, right here, I think stop loss can be so close. It's like 100 to 120 pips. It's probably going to be too close because your spread's probably going to be wider than that. And yeah, so you're going to stop that right away. So, yeah, it still would have been around maybe with like one, if you took every trade from like 12 until market close, which should have been right here. FTMO closes around like 120. It's different from the actual charts because it closes earlier. But yeah, looking at the trades here, you probably would have ended up with maybe just 2 losses or 1 loss. It doesn't look like a lot of losses, but if you're doing a 1-to-1, you'd still be in the negative. So let me see if there's anything else here that I'm missing. All right, let's see. All right, so let me scroll up real quick. Yeah, Rick said the strategy blows during swap. Okay, so I think I looked through all the messages. So let me see if I scroll down a little bit. But yeah, did that help with your question there, Rick? I think, yeah, because Rick, you're the one that asked me to look at the trades around that time, right? So I think there was like 3 wins and 5 losses, but there's like a lot of reasons why I wouldn't have. Well, the main reason I wouldn't have traded during that period is because we usually don't trade during that period. I don't think I send out the warning anymore, but there used to be a warning that was sent out. I just stopped sending it because it was kind of common sense to everybody not to trade during the swap. Like for example, right here, every day at noon, this message was sent out. It just said, we recommend, temporarily canceling all pending orders, removing your stop loss for any open positions during the swap spread to avoid getting automatically stopped out because the spread gets really wide during this period. And if your stop loss was like 100 pips, you for sure would have gone stopped out even before the trade even started to move. So I'm not sure if you were aware of the swap, CD or Rick. I think both of you guys had the same questions. This isn't risky Rick. This is the other Rick. So yeah, around 12, you shouldn't be trading around that period anyways, because that's the swap period. So you shouldn't be trading around this period to begin with. If you look at the trades prior to that, I don't know if there's like more here, but even on the 1 minute, the strategy is not meant for the 1 minute. It's always been for the 5 minutes. So I know a lot of people like to apply it during the 1 minute, but I feel like a lot of you guys are applying it when you're not, like when it's not a good time to trade, or you guys are applying it and not really following the logic behind the strategy, right? The logic behind the strategy is that price is ranging within an area. And I think a lot of people are just entering trades without even thinking. They just enter the trade and they think that it's guaranteed to hit when it's not supposed to, especially if it's too tight. Rick said went from drunk Rick to risky Rick. So CT said, what's the minimum stop loss TP you'd use for the V3 if they're too short? I generally have at least a 300 to 400 pip stop loss CD, because your spread's going to be around like 100 pips. So the thing is, if you're going for 150 pip stop loss, if it goes anywhere in drawdown, you're automatically going to lose the trade. So it's like, it just doesn't make sense to take any trades that are that tight. That's why even for the 1 minute trades here, like if you look at any of our other variations, the stop loss has always been at least 300 pips, right? It's never been less than 300 pips. So the thing is, you're entering these trades here and your stop loss is 150 pips. Obviously your trade's not going to work out because it's almost nearly impossible. You have to have like zero drawdown to survive this move. So I'm not sure if you like knew that or understood that or understand, you know, like how the spread works. But the thing is, how the spread works is if you're entering a trade and your stop loss is, so let me choose an example here. So if you're entering like a sell here, I know you're not entering sell, but you know, just for example, if you're entering a trade here and your stop loss is like 150 pips, which is 15 points, you're technically entering this trade down here, because you have to cover the spread first before you make any profit. So if your spread is like 120 pips, which is generally what the spread's like during the swap. I mean, if you even look at FTMO right now, the spread is like, let's see, it's 100. Here, let me just, I'll check. The spread right now, let's see, price difference is 511 minus 489. The spread's about 220 pips. So if your stop loss is 150 pips and your spread is 220 pips, if you immediately enter the trade, you're automatically lost. I'm not sure if like, because some people don't understand how the spread works. I'm trying to explain to you guys. I'm not sure like who here is familiar with it, who's not. I just want to make sure that you guys understand. So when you guys do take trades, you want to make sure that the spread's not too wide. If the spread's wide, you have to use a wider stop loss, obviously, because if that's the case, then because you're going to go into the negative this much. So if you wanted your entry to be at this point, say, for example, your entry is going to be here at 150, you're technically entering down here. So as you guys can see, when you enter the trade, if it goes anywhere into drawdown, because you're already in this much drawdown, if it goes up just a little bit, like 1 pip, you're already stopped out. So just want to make sure that you guys understand that, not just for CD and Rick, but like for everyone here in general, because I feel like a lot of people don't understand. That's why there's certain times where you guys don't trade. I don't trade during Asia most of the time because the spread's too wide. You know, if you enter a trade and your spread is like 200 pips, it's going to be nearly impossible to make any profit. Like for example, here, if your spread is 200 pips and your TP is 150, you literally have to make this much to get out of the trade. So instead of just reaching this point, you have to get way down here to actually reach that. Because I'm sure you guys have seen that before on MT4, where it passes your TP and you're like, why hasn't it closed me out? It's because your spread's too wide. So quick answer to your question, CD, my minimum stop loss TP during New York would be like 300 to 400 pips. During Asia, it'd be even more. It'd probably be around like 500 because the spread's even wider. So it just depends on like what you guys plan on applying. I personally don't recommend you guys apply this on the 1 minute just yet, unless you guys really know what you're doing. You know, like Isaac, he's okay doing it on the 1 minute because he knows what he's doing. Obviously, his profits reflect that he knows what he's doing on the 1 minute, and it works. If you guys don't know what you're doing, stay on the higher time frames until you guys are ready to move to the lower ones, because the last thing you want to do is just eat losses because you get stopped out due to spread. Because I've seen a lot of people do that. A lot of people ask me, you know, what happened to my trade? I got stopped out. And then we look at the spread and the spread's so wide and their stop loss is like so tight. So it gets automatically kicked out. So I think that's it with that question. CD, is there anything else that you want me to go over with regard? Because I know you and Rick had a couple of questions regarding it. So one thing that I would recommend is not to trade after 12. I for sure don't trade after 12. Like I've mentioned before, how my schedule works. Basically, I'll trade from 6:30 to 8, take a break, come back around 10, maybe take like one trade from 10 to 11, and then I'm done. I don't ever trade after 12. So I think that might have been something that you guys might have not caught, but definitely should not be entering trades after, that period right there. All right, so I don't see anything from CD. I don't see anything from Rick. So the problem with the 10 to 11, yeah, the thing if you're trading from 10 to 11 is that the spread's not that wide yet. You're still in the middle of New York session. But you said you were trading 2 hours ago. It's 2:52 here. So if you traded 2 hours ago, that'd be noon. It'd be 12 for me here. So I guess you're trading 4 hours ago, not 2 hours ago, because it was actually 12 o'clock for me here if you traded 2 hours ago. Or it was actually like almost 1 because it's 3 here now. Yeah, no, yeah. So CD said, so maybe I did use later on when the spread got wider. That's what caused the losses. Yeah, and I think that's probably what it was, CD, which is fine. You're still learning, you're getting it down. But yeah, you want to be careful and be cognizant of the spread. I know it's kind of hard to tell for MT4 because they don't have a number there. The thing with TradingView that I like is that they have the spread right here. So you can see the spread, but this spread doesn't reflect what's on FTMO or whichever broker you guys are using. C's question is, so you would only use 1 minute variations while it's currently ranging? Not necessarily. I usually use it during early New York session when volatility is high. So I usually don't trade it at all when it's ranging. We usually wait for it to break out of the range. So if I'm sure you've seen my lives, CD, because I've seen you there during the morning. When I'm trading and I'm marking up the zones, I always remind everybody, right? I'm like, okay, we're waiting for this to range so that we can catch it as it breaks outside, right? I don't necessarily wait for it to range. I wait for it to break outside of the range. So short answer to your question is no, I don't necessarily only take it during when it ranges. I actually take it when it's not ranging because I wait for it to break outside of it. Because here's the thing, guys, like what you guys are looking for is for direction and price, right? So for example, here, if price is ranging, here, let me show you guys a range like this right here. This is a range, right? I'm not going to trade when price is within this area because there's not going to be any entries here. I mean, there probably wouldn't even be entries there to begin with. Yeah, there isn't really too many because you're not really getting a direction. If you get a range like this, you're not going to get any clear candles. Comparing this to this over here, where price isn't ranging, when it breaks out of the range, this is where there's more entries to likely appear because price is actually moving directional. So no, I don't necessarily trade only when it's ranging. I usually do the opposite. I try to avoid it when it's ranging. But I mean, you can still trade when it's ranging. It just depends. But I don't necessarily look for it to range. Let's see, CD's asking, you use the confluence where it's depending. Yes, it's one of the requirements. See, so guys, I think I don't know if you guys like CD. Are you familiar with the requirements for the V3? Because that's like one of the requirements. Like you need to there needs to be a penning momentum in that direction. So I think you might have to go back and like review the requirements here. Maybe you want to take a screenshot of the CD because it's one of the, I mean, the strategy doesn't change just because it's on the 1 minute CD. It's the same strategy. So it doesn't even have a time frame here. This is the K2 variation version 3. The requirements are all the same here for it. And, just reiterating, it's not meant for the 1 minute. So a lot of these questions that you're asking me about the 1 minute, I don't have an answer to because it's not meant for the 1 minute. I don't even really apply it on the 1 minute. We only applied it with the 1 minute recently because there hasn't been any entries off the 5. So the requirements still stay the same. But yeah, no, just confirmation for you. The strategy is still the same, requirements are the same, but I mean a lot of these questions regarding the strategy on other time frames are not necessarily like this isn't even set in stone yet. So I know a lot of you guys have questions about the variation and you guys have like very specific questions. I think you guys would be better off actually back testing yourself and seeing if it works instead of because the thing is I don't know either. So if I knew I'd have a better answer for you guys, which I wish I did, but I don't because I don't trade on the 1 minute. If you guys had questions about the 5 minute, then great, because that's the only time frame that I mainly traded on. We've only been trading it on the 1 minute today. I think today's the first day we actually traded it on the 1 minute because there hasn't been any entries on the 5 for the past 2 days now. So the more that we test it on the 1 minute, the better answers I'll have. But I haven't really tested it. I don't back test anything at all. I just forward test it. That's why everything's done on the live and we make adjustments on there. But for the most part, I really don't know. You probably want to you're probably better off asking this in the group, CD, because there's other people that do trade this on the 1 minute. I don't trade on the 1 minute, so I don't have any good answers for you, unfortunately. But it's still a work in progress, right? There's nothing here that's set in stone. Even these requirements here can change. They're not. That's why there's no official videos for these variations just yet. I mean, they're almost there. They're getting there, but at the moment, still not yet. So I think that's it with here. Anything else, CD, with regard to the variation? I should probably, sorry guys, I should have probably made that clear. I don't trade this on the 1 minute. So I don't know if you guys think that I trade this like mainly on the 1 minute. I mainly trade on the 5. Obviously I'm gonna start trading on the 1 minute, but today was the first day I've traded it on the 1 minute. So I don't really know how it works and how it's applied and like what changes need to be done. It's just stuff that I pick up along the way. Yeah, no problem, CD. Glad I could help you with that. Sorry, I wish I could be more help to you, but I just don't know as much on the 1 minute just yet. Just another reminder for you guys, don't trade between 12 and market close. So that's basically from 12 up until I think 2 o'clock. Yeah, 12 to 2, no trades on any time frame because you don't want to get caught in the swap. That's gonna be one of the important things to look out for. All right, so I think that's it with those questions there. Sorry, I try to be as detailed as possible, but it'll get better as time progresses. So let me scroll up a little bit and see what else I'm missing here. All right, so that's it for that question there for Rick and for CD. All right, so Maddie said V3 at 7-11 on the 1 minute chart. Let me go back and take a look at that. So let's go back to 7-11. I think we were looking at that during the live, right, guys? Because I think I was live during that time. But let me just go take a look at it. I don't think I took it. Let's see, 7-11. Okay. Yeah, so there was I think this is when the news happened, right? There was news around that time, Eddie. So let me check this real quick. Today on the 1st, there was news at 7. Yeah, so there was the ISM manufacturing and Jolt job openings. So I think what we were looking for at that point is we were still waiting for price to react to the news because, we had that drop around like 7 o'clock. And then we were trying to anticipate it, whether it was going to come down or continue on up. But, let's just analyze it and we'll see. I don't remember what the fundamentals were looking like around that time. So I don't know if that had an effect on it. But let me see. Sit on 34. Let's see, and then we'll move this step forward. Yeah, that went straight to stop loss. I know for sure we didn't take that trade during the live because I didn't have any losses today. I'm trying to figure out like what happened there. Was there anything else that happened? I feel like there was another news event that happened around that time, but it's not on Forex Factor. I remember I think someone was sending over. I think Joshua sent it over because he was looking on like on my FX book or something like that. But let me see. Yeah, Maddie said could be because it was still reacting to news, but I'm not so sure. From my perspective, I think it did happen because of the news. Because like so, for example, right here, this is when the news came out, right? When the news comes out like that, we were actually waiting for this to swing up. I can't remember what was going on here, but I know there was a reason why I didn't take this trade here. Let's back pull up live. Maddie said, I've been studying the 1 minute variations and the ones that are either a V1 and a V3 or V2 and V3 hit very nicely. Could be reaction to news. Randy said sentiment was about 51%. Fundamentals were meh. Yeah, I think that's why we didn't take the trade there, Maddie, because we were waiting for price to come back. Because I think price was, so what happened here was, it wasn't even me, it was actually Rick that was identifying it. He was, I think right when this happened, he was like, oh, price can be making its way back to price where, before the news happened, which is right here. And I think that's why we weren't even looking for sells at this time. Because I do remember seeing this, but I was like, oh, I'm not going to take this because, and I think we even talked about it, Maddie, on the chat. I just can't remember what the reason was for that. Was there an order block there? I don't know if CT told me there was an order block. I can't remember, but I feel like there was a reason why. I mean, there's order blocks there after, but the trade came up like over here. Gotcha. Yeah. So Rick said back to news and CT's order block, I think. Yeah, I think that's what was happening because the thing is, if I thought this was a good trade, I would have taken it, but I didn't. I remember now. So I remember we were doing this. We were it's just coming back to me now. So I remember we were looking for it to pull back. So this is kind of what happened right here. We waited for it to pull back a little bit. And then I was like, okay, if price comes back, because I remember price went up. And then I was like, okay, if price comes back down, I'll enter it for a late entry. And then what happened was it pushed up even higher. And I was like, oh, good thing we didn't take it. Because I remember that people were asking about this trade here during the live. And that's exactly what I said. I was like, oh, price went to draw down. I was like, okay, if price comes back down, I'll set like a sell stop and then I'll catch it down. One other thing too, Maddie, I do remember now. One thing that I remembered was that the stop loss was too close. Because I remember us talking about this. I was like, Maddie, are you going to take it? And I was like, no, stop loss is too close. It's around 25. I want it to be around 30 or 40. Remember? So that's why we skipped it. Because I remember we were talking about it on the live. I don't know if it was in our private chat, but we were, and this goes back to what I was just talking about with CD and Rick earlier. If the stop loss is too close, like around this period or this area, I usually don't want to take it. I want to hold off a bit and then wait for a bigger move, something like this or like that. Because even on our normal 1 minute trades, we wouldn't want to take it if it's too close. Like pretty much all the strategies here. I don't have it on there, but the momentum entry or pivot scalp, it's 100 and 300. And then also with the high lows, it was 100 and 300 as well. So I think the main thing right here, Maddie, because I do remember us discussing this is, and maybe this is a requirement that we'll add at some point in the future once I start to apply the 1 minute more. But I think definitely one key thing would be that we need the TP stop loss to be a little bit more than this. It has to be at least at like 30. And if it's too tight, then we just don't take it or 40. because you kind of want that space in between. Let's see. CT said Sean, Uncharted and Tella in and out for less than profit, but it was quick. Yeah, I think you did send it to me earlier, right, CT? Yeah, you did. So yeah, me and CT were actually discussing this during the live. I can't remember, but yeah. CT did send me this over here. He did take that because he saw it bounce off the order block, but then he got out right away. Same with this one over here. Yeah, he got out like super quick. Did it hit TP? Yeah, not full, right? It just got close to it. I do remember because it did hit TP. Yeah, so the trade here actually did hit TP, guys, but I mean, I wouldn't have taken it because it was too close. But yeah, man, I don't know if we're looking at the same one. Are we looking at the wrong one? I swear I thought it was a loss, but it actually won. It said 7-11, right? Yeah, it actually did hit TV. I'm tripping out now. I thought this lost. Let me see, Maddie. Maddie, this is the one you're referring to, right? Oh, no. Okay, sorry. No, I'm wrong. The one that we were referring to is actually this one over here. So this one did lose. Yeah, that was the one after. So it was this one right here. I can't remember. And now I'm like kind of confused because this is actually after 34. Yeah, sorry, man. I can't remember what happened, but I know we did talk about this because I didn't take the trade. Yeah, but I do remember this. So if you guys go back and watch the live from today, I remember price was like around here. It wasn't fully at stop loss yet, but it was like around this area right here. Because we were waiting for it, and I was like, oh, doesn't me and Maddie were like, oh, this trade doesn't look like a good trade. So we're like, okay, we're gonna wait for it to come back down. So price was actually up here. And then me and Maddie were like, okay, we're gonna put a sell stop here, maybe catch it as it drops down. But then it hit like it went past the stop loss. And I was like, okay, we're just not gonna take it. I think what we were waiting for here at this point, Maddie, was the fact that it was gonna come back to price prior to the news. And we're just waiting for the reaction, which it ended up coming back to that point exactly. And I think Rick made like profit off that too. Yeah, no, that's exactly what happened there, Maddie. Well, I mean, good thing we didn't take that because that would have been the loss if we did take it. Yeah, no problem. I mean, it's a little confusing because it's hard to remember these trades because there's so many that came up today that were good and some that were like super risky. Yeah, main reason for that was the fact that that price was going back to where it was prior to the news. All right, let me scroll up real quick, see if I missed anything. Yeah, Maddie said any V3s that have a V2 or V1 on them have a high probability of hitting. Yeah, it's pretty much using like a double confluence or triple confluence in some instances. But yeah, there was a couple here. I can't remember which one we saw, but we did see a couple over here. Like, there was like a V2 over here that lined up with it, but that I totally missed. I think it was this one right here. Yeah, it was this one. So for this one right here, as you guys can see, there was two variations that lined up. There was a variation 3 because we have the high here with the green candle and a red candle right after it. And then there was also a V2 because this was a strong red candle. So this is one that Maddie's referring to. If you guys see something like this is like almost for sure going to hit. So there goes the entry there. There was like a couple confluences here too. Like for one, it was V2, V3. Also was rejecting off the session. And obviously you can see right there, I hit TP right away. Yeah, no, there's a lot. Yeah. And Maddie said, of course, you have to factor in fundamental sentiment in certain zones. But if you guys do match up V2s and V3s together, kind of like what we do with the triple confluence, it lines up. Yeah. This was actually a really good entry. I think I took this one with you guys. This is the one that CT lined up and he had the order block on the top. Yeah, this one right here. It was a perfect entry. Yeah, that was exactly what we were waiting for. It's this one right here that you drew up, CT. So, I mean, there's always going to be ways to make the trade better than it would be without all the extra confluences, although they're not necessary. If you have a trade like that, you could have full confidence with the move. Yeah, Maddie said I would probably sit it out if there are two entries going against each other. Yeah, no, same here, Maddie. And these are all good points, right? It's good points to remember. As this strategy continues to develop, if we have points that are or things that we take into consideration that make the trade a lot better, then they'll become official requirements. But I think currently right now, since we're still testing it, we're trying to keep it as minimal as possible. But it'll get better. Let's see. The market is open again. Okay, guys. So like earlier, I said not to trade between 12 and market close. Again, right here, I wouldn't recommend trading between market open and the first hour or two. So basically this whole period right here should be dead zone. You guys shouldn't be trading between, you guys should not be trading between 12 and probably 5. And this is my time Pacific, so for all right, guys, so just keep that in mind. This is usually going to be dead zone right here where you guys should probably not be trading, because the thing is you get a lot of manipulation towards market close here because because people either want to buy the dip or they want to sell to get out before the market swap. And then again, right here, there's like no volatility. So you shouldn't really be trading between now and the first 2 hours. So just keep that in mind. I'll try to add that to I'll try to remind you guys as much as possible, but just remember, don't trade near the swap. That's going to be the main thing. Like 2 hours before swap, 2 hours after swap. That would be a good thing to remember. All right, let me scroll up real quick and see if I missed anything else. Yeah, CT said nice trade at 1505, but not recommended. So yeah, like right here, this is the one that CT just mentioned. It's a V3. It's a nice trade, but not one that I would recommend or that anyone should really take. For one, the stop loss is too tight, and for two, it's just right at market open. So volatility is too slow. And like with what CT said, it's a gap closer, so comes risky. All right, let me scroll back up and see. Oh, gotcha. Yeah, CT said it actually over here. Sorry, that's the wrong trade. CT was actually referring to this one right here, the gap closer, because price right here gapped, and then it just corrected back to the upside to close the gap. But same as I discussed before, the stop loss is too tight, and the spread right now is, let's check for you guys real quick. Spread is currently, let's see, 2960. 2960 minus 2640. Oops. I don't know what I just did there, but 3110 minus 2840. Spread's 270 pips right now, guys. So if you were to try and enter this trade right here and your stop loss is for 140 pips, you'd automatically get stopped out. If when at any moment in drawdown, you would have been automatically stopped out because the spread's wider than your stop loss. So definitely don't trade right now, guys. All right, let me scroll up real quick and see if I missed anything else. All right, let me scroll down a little bit. Alan said, waiting for TradingView to tell me why K2HL is not showing up on my chart when backtesting past 8 hours. Alan, so TradingView only plots a certain amount of plots at a time. It doesn't go by time, it goes by plots. So, if you want to count how many plots are here, 1, 2, 3. So 2, 4, 6, 8, 10, 12, 14, 16, 20, like about 30 plots. There can be about 30 plots at a time. So it doesn't go back past 8 hours because there's too many plots on the chart. They can't have like a million of these high lows all over the chart. If you go back, if you replay it from that point, you get another 30 plots, right? You go back again from here, you get another 30 plots. There's only a number of plots that you can have here at a time. Same with other time frames. Like if you go on the hour, you get about 30 plots, but it goes way farther back, right? This goes all the way back to like January 12th. So the way that TradingView works is you can't have an unlimited amount of plots because the thing is it's going to slow down your computer. Not everyone's computer can handle, this much data, especially if you're not using the built-in. If you're using the web browser, like for a lot of people, it'll like crash their computer because a lot of computers can't handle, that much data on the screen, because you guys got to keep in mind that these indicators use a lot of data. Like all these algorithms that are put into these indicators have, they take performance and power in your computer. So like, for example, if you got a shitty computer, well, not everyone has like the best computer out there, but if you have a slow computer and you try to plot everything on the chart, your computer is going to run extremely slow. So TradingView, like I think they've capped it, like how many plots can be on the chart, because they want it to be accessible for like pretty much everyone. So that's the reason why it only plots, X amount of plots at a time. There's no issue or error on TradingView's part. That's just how the system works. Because I've used a couple indicators, like I'm trying to think of one. There's this one indicator that I used and it would literally freeze my computer, and I have like a really fast computer. So I'm trying to figure out what it was called, because I want to show you guys on the screen. Like when you put it on, it would like freeze up my entire screen. Kind of similar with like what happens here with the sessions. So sometimes if you turn on the sessions, well, it's working fast now, but sometimes if you turn on the sessions, it'll take a long time for it to actually plot on the chart because it has to pull back data for the entire day. I think on the 1 minute slower. Yeah, so as you can see right here, it's a little slower. If you click on it, it still comes up because it's preloaded. But if you like start up a new chart and you turn on your sessions, it's going to take a while because it has to pull up the data for the past day. And if you're on the 1 minute, it's a lot of data to input into the chart. Let me scroll up real quick and let me see what else I'm missing. Let's see. Think that's it with these. Yeah, and I understand what you meant earlier, Rick, because Rick was saying how like you have to kind of go back to see if it to see how the candles change, because the thing is these high lows do repaint. So that's why it's kind of hard to apply it on the 1 minute, because the market's so choppy that it'll repaint pretty often. On the 5 minute, it doesn't repaint as often. So it's a bit easier to catch moves here. And that's why I usually prefer to apply it on the 5 minute versus the 1 minute. Let's see if there's anything else here. I think that's it for the question. Okay, we have another question from Akshay. Akshay is asking, after the 6 to 8 p.m. Pacific or 8 a.m. Pacific, what is the other good window to trade for New York session? So for me personally, Akshay, I trade between, here, I'll just try to mark it up for you guys. Here, let me clean up the chart. So my areas to trade would be, and it's the same thing that I draw on the chart every day. So like basically right here, I'll trade from 6:30 to 8. This is what I do live with you guys. and I don't trade from like 8 to 9. And you guys can see exactly on the chart why I don't. So like from 8 to 9, you can see what happens with the chart, right? Nothing happens. It just goes sideways. 9 to 10, it's like literally the same thing. Nothing happens, right? So I don't trade during these periods. I'll trade from 6:30 to 8. You see some volatility here where price actually moves up and down. I don't trade from 8 to 9. I come back sometimes from 10 to 11 because, or 10 to 12, really. 10 to 11, sometimes 10 to 12. And you guys can see the reason why I trade during this period. So usually it's not this slow, but as you can see right here, bigger moves, consolidation, consolidation, kind of directional push to the upside right here from 10 to 11. And then again, right here from 11 to 12 sometimes. It doesn't always happen, but for the most part, let me go back to another day, like yesterday. I think that'd be better. I think yesterday would be a better sample to show you guys. So like again, right here, I trade between 6:30, which is right here, to 8. This is my normal, live session time. And you can see why is it a good time to trade, right? Because price actually moves directional during this period. So it's kind of bullish right there. 8 to 9. Sometimes you'll get a bullish push like towards like the end of the hour. So like, for example, right here, price was consolidating for a while. All of a sudden it pushed to the upside. But then look what happens from 9 to 10. It just goes right back into consolidation. Right. And one thing that you guys want to keep in mind is like the day of the week. Like this was Monday, so obviously you're going to see consolidation. Tomorrow's Wednesday, so you're probably going to see a lot more movement. But yeah, for the most part, I generally trade from, I'll just say to 12 because that's just a better time period. I'll trade from 6 to 8, and then I'll take a break. I'll go to the gym or something. I'll do something to just get away from charts because it consolidates during this period. And then I'll come back around 10, and then maybe I'll catch like 1 or 2 trades if I see anything around this period. Because right here, it kind of consolidates, but usually this is where the mid-mark reversal happens. Let me see if I can find a better example for you guys here. Even on Friday, but let's see. This was a Friday, so it's kind of not, the market wasn't really moving as smooth. The market was kind of crazy. Well, like all of last week was kind of crazy, but let me see if I can find a better example here. So 6:30, and just keep in mind, guys, the market is not always going to move smooth. Some days it'll move a lot smoother than others, but sometimes it's just not going to move very much. So like again, right here, 6:30 to 8. I know it's not a smooth move, but you do have volatility on both sides. So you can take buys and you can take sells, 6:30 to 8. Again, break time from 8 to 9, 9 to 10, and then from 10 to 12, possible last minute trades here. So again, right here, you see a lot more volatility. Sometimes you'll see volatility from 8 to 9, but not always. I can't remember if there was something going on Wednesday of last week. I think Biden was speaking or something, because I know price was going up and they were like, all right, once 8 hits, we're going to stop trading. And I think that's when Biden spoke. And that's why price pretty much slumped right there. So it just depends on the day. Some days are going to be better than others, but for the most part, the main times that I trade would be from 6:30 to 8, and then again from 10 to 12. Usually 10 to 11, but sometimes 10 to 12. Actually, is asking, great, thanks. I know Asia time is not good, but is there a relatively better time to trade Asia? What I would recommend is to trade the same time that Isaac trades, because Isaac actually trades really well during Asia. So let me see. I know he had the time here somewhere. Okay, so here's the times that Isaac trades. He trades the first 2 hours of Asia, and then London from 2 to 5:30. He had 33 wins and 1 loss due to a spike at exit, and then also 7 wins during the live. So Isaac basically trades during the live session. He trades 2 hours of the first 2 hours of Asia, and then London from 2 a.m. to 5:30, which is pre-market basically. So those are probably going to be the best times for you to trade Asia too. Like for example, well, we're not in Asia yet, but Asia is going to open in about 30 minutes. So it seems like he trades from, let's see, 6 or not 6. It's going to be 4 o'clock my time. So 16 till 18. This is the period that Isaac trades. And if Isaac's doing that well during that period, that's probably gonna be the best time to trade. From my personal experience, I do trade around this period too sometimes. This is why I was telling you guys don't trade around swaps. So don't trade from like 12 up until 16, right? And then you can probably trade around here. I know once it gets around like 22, like closer to London time, this is where it gets risky. I wouldn't recommend people trade around here. So 22, oh, you can't see it, but basically 22 my time, which is 10 p.m. up until 2 a.m., which would be London open. I think those would be risky. So, and that's exactly what Isaac does too. So Isaac trades, actually he trades the same times I do. So first 2 hours of Asia, don't count Australia, because Australia is open right now. It's technically not Asia. Asia opens in the next 30 minutes. So basically first 2 hours of Asia right here, and then 2 hours after London open. And that might be a good time for you to like look for entries. But you know, just like I mentioned before, guys, it's all going to be it's going to be a trial and error, right? Yeah, thanks, Kyle. Kyle gave the clock right there. So if you guys want to convert the time, it's just look for Asia open first 2 hours, and then 2 hours after London open, and then New York session, obviously the time that we normally trade. Yeah, exactly. So Kyle said Asia opens in 31 minutes. Exactly. So it's almost there, but it's not quite. Yeah, no problem. Hopefully that helps a lot of you guys here who like to trade during, or who want to trade during Asia. Let me scroll up. Just want to make sure I'm not missing anything. I think that's it for these questions. Let me see if there's anything else here. Fahad's question. Sorry, Fahad, I just saw your question. Fahad said, after you've gone through everyone's questions, can you explain the V3, please? Sorry for asking a new question. So Fahad, I think you're still here, right? Yeah, there you are. Mauricio said 2 hours after London open. Sorry, I missed it. Yeah. So 2 hours on Asia open, and then 2 hours after London open. It's basically considered pre-market. So it's 2 a.m. Pacific. Yeah, 2 a.m. Pacific up until 5:30. So if you guys see here, Isaac actually put it in the chat because everyone asked him what time he trades. He trades first 2 hours of Asia, then London from 2 a.m. to 5:30 a.m., which is exactly the same time I trade too. Or I try to trade during London, but it's too early for me. So I just stick to New York. Yeah, no problem. All right, Fahad, let's go over the let's go to the 5 minute. I don't want to keep going over the V3 on the 1 minute because I don't necessarily use it on there. I mainly use it on the 5 minute. So let me see if I can find an example. All right, so there's one right here. I don't know if this is a really good example. I don't know if this is really a good example, but I'll just use it just to show you. So this is just the first one that I saw here. The requirements here for the variation V3 is going to be, so first requirement is to identify the K2 high-low using the K2 high-low indicator. So for example, right here, we have a high, right? That's going to be first requirement. Second requirement is to look for, if you're looking for buys, you want to look for a low with the red candle. If you're looking for sells, you want to look for a high with a green candle. For example, right here, we have a high, so we're going to be looking for sells. With that said, you want to confirm a high with the green candle. There's a high right there with the green candle. It's going to be requirement number 2. The third requirement is the following candle needs to be opposite, and it can't have a signal on the candle. So right here, we have a green candle. The next candle is red, which is opposite. So that's going to be requirements 1 through 3. The fourth requirement, there needs to be a pending momentum in that direction. So for example, right here, in order for us to have a pending sell, there would have to be a buy that's already up right before it. So right here, we have a buy that's already up. That means that the next signal is going to be a sell. So that would be the pending signal for this right here. Next, you just want to make sure that the max stop loss is 750 pips, which is 75 points. So we'll go and just measure this right here. It's kind of tight, so it's not one that I would necessarily take, but I'm just going to use this for example. It's not past 75, so it's technically okay. It works. You're going to use a 1-to-1. So basically 15-15, which is 150 pips in both directions for 1-on-1 to risk reward. You let this run, and there you go, full TP. I know it moved really quick, but that was a full TP right there. Let me see if I can find a better example. That wasn't really a good one. Let's see if I can find one here. Okay, so here's actually a good one right here. Or, I mean, it's not good. Again, I wouldn't take this trade here because it's right next to the sessions, but I'm just going to use this for an example. So let me just turn this off so that you can see it here. So again, right there, you identify the low. There's a low right there. So you want to confirm that the low is a red candle since you're looking for a buy. Third, you want to confirm that the candle is opposite. We have a red candle, green candle after it, fits the requirements. Next, you want to confirm there's a pending buy because there's a sell right here. There's no buy prior, so it does fit the requirements. Move this up a little bit. TP stop loss is going to be around 330 pips, or not a little more, 340 pips. So pretty much everything there is pretty much met. You let it run, and there you go, full TP with basically no drawdown. So that's basically how it would work. Do you need another example, Pod, or do you get it? So if there's anything else there, I could show you another example, Pod. I'm not sure if you need another one, but I could show you another one if you do. Yeah, no, it's pretty simple. I mean, the thing with it is that you just need to practice it, right? It's all going to be part of execution, because what will happen sometimes is that you guys will miss some of the requirements. I miss them myself too, because sometimes I'll look for an entry and then Maddie or Charles or somebody will be like, no, there's no entry there because I missed one of the requirements. It's all going to come with practice. Even myself, I'm still trying to figure out everything specifically, but I mean, for the most part, it's pretty simple and straightforward. Yes, so Akshay is asking, is a stop loss based off the high-low candle? Yes, that is correct. So right here, the stop loss is set at the high-low. TP is equal distance for a 1-to-1. So for this entry right here, if you're going to enter this for a buy, your stop loss is going to be at the previous swing. You don't want to put it like right at it. You might want to put it slightly below. So you might want to just add a little more to it because you want to cover the spread sometimes, right? Especially if the spread's wide. So right here, you might want to use like maybe, it's supposed to be 34, but maybe you want to use 38. Either way, you have a little space right there and it still works, right? You just don't want to have it too far out. Like you don't want to overdo it and then put it to like 50, right? Because that's like, you're just overkill. It's like way too far out. Even though it probably still hits. Or see, this is how you'll get screwed. Because sometimes people get greedy and they put their TP or stop loss too far out, and you get so close to hitting TP, but it doesn't necessarily hit it exactly. It'll hit it eventually, maybe, but you don't want to get too greedy. You want to have it somewhere kind of close to that low. Fod's question said it doesn't matter if the second candle has a wick or not. No. So for the V3, the wick doesn't matter. It's just it's actually a lot easier than the V2. You're just looking at whether it's an opposite because you're looking for a reversal. That's pretty much what you're looking for with these setups here. Here, let me scroll up real quick. CD said, would you check other confluences on other timeframes for the V3 on the 5-minute? I noticed if it coincides with the 10-minute, it usually hits better. So I do sometimes, CD. I mean, it just depends on the market conditions, right? If it's clearly going up or if it's clearly going down, it's not really necessary. But if you look on the other timeframes when price is kind of choppy, then it does help a lot. So I personally don't use it all the time, but if it's like kind of iffy, then I will check on different timeframes. And you guys can see that during the live. Like during the live, I'll sometimes look at like the 1 minute, I'll look at the 3-minute, I'll look at the 5-minute, I'll look at the 10-minute, even sometimes I'll look on the hour if I really need to. But for the most part, yeah, I do look at different timeframes. I don't necessarily base my trades off those confluences, but one thing that works sometimes is if you use the momentum signals as confluence. So, confluence for, like, say, for example, you get a buy signal here on the 5, right? And then you have a buy signal coming on the 1 minute or 3-minute or 10-minute. That's probably gonna give you better confidence that, that buy signal is gonna stay and it's gonna keep pushing up even more. So, I mean, there's different ways you can do it. None of this is really necessary. It's not required, but it is an optional confluence if you wanna have a better confluence and confidence in the trade, right? You want to be 100% confident. If you don't feel confident about a trade, then I recommend just skipping it. That's usually what I do, and it works perfect for me because then I don't take any losses because I don't take anything risky. Only the stuff that I'm like 100% sure about. See, that guy said, most of the time, every trade I'm taking lately is like 3 lots and TP stop loss of 6,500 on the DOM. Leaves a perfect amount of room most of the time, and I just adjust to the previous swing. Yeah, that's a smart move too. I've done that myself actually. So when the market's moving too fast, I sometimes set it at 750 like the max, and then I'll just adjust the stop loss when the trade moves. So like, for example, that same example over here that I was just looking at. Sometimes if the trade's moving too quickly and I don't have time to make adjustments, then I'll just like automatically set 750. Like for example, I'll do this. I'll just enter it like that, 750, because price is not likely to drop that heavy like right away. So for example, I'll enter the trade and I'll be like, okay, now I have to adjust it. But at that point, price is already way up here. And I'm like, oh, okay. I probably hit TP already. But then at that point, I just move my stop loss and profit, or I move it to where the TP was supposed to be. And then it either stops me out in profit or it keeps going. So there's different ways to apply it. If the market's moving too fast, that's usually what I do. I'll just have it set to 750 by default, and I'll make the changes right away as soon as I'm in the position. Let's see, scroll up real quick. And yeah, I think that's it with that question there. So if there's anything else you need me to cover on that, Fahad, let me know. But yeah, so Ashk's question, I do set it to the previous high low. Sometimes I give it a little space. Most of the time I do. And then for that guy, same situation. He uses it at 6,500. I sometimes use it at 7,500, which is the max. You just want to make sure you're not over leveraging. That's always going to be super key with entering these types of trades. Yeah, no problem, Fahad. Glad I could help you with that. Let me scroll up real quick and see if I missed anything else. All right, let me scroll up real quick. Todd said, someone please send Brock a Red Bull. Oh man, yeah. Are you guys looking at Brock's camera or something? I guess I'm guessing Brock looks sleepy. I just saw the messages because someone said give Brock a Red Bull. Let me scroll down a little bit, see what else I'm missing. I think that's it for the questions right here. Let me scroll down. I think there's a couple of questions down at the bottom. If I missed your question, guys, just put the question back in the chat. There was a lot of messages that came in around the same time, so it kind of flooded, and I missed. Let me see if I can scroll over here real quick. I just want to make sure I'm not missing anyone's questions because obviously this session's for you guys. I just want to make sure that I answer all of your questions before we wrap this up. All right, so let's see. Jay over here is asking, what about variations on different time frames or opposite at the same time? So yeah, Jay's asking like if you have variations on different time frames that are opposite. Like for example, you have a variation telling you to take a buy on the 5 minute, and then you have an opposite one on the 1 minute. I would usually, if that becomes a case, I would go with the trade on the shorter time frame. But I mean, most of the time I would just skip it. If that happens, I would skip it. Maddie skipped it too. We both look at it the same way. It's just too risky of a move. But in some situations, because this is what might happen sometimes, like for example, right here at 9:55, right? Sometimes you'll have a pullback, like a smaller move, and you can catch both moves. You can catch the one on the shorter time frame, and you can catch the bigger one because it swings right back up. So 9:55, which is right here. $9.55 to 10. All right, so here's an example right here, right? So you got actually it's gonna be hard to find. I gotta find an actual example. I thought this here was gonna be a sell, but there's already a sell signal there. Over here, you already got a buy. So trying to find one that was opposite, but I don't think we have one here. Maybe this one right here. Yeah, actually, this is an example right here. So for example, right here at about 10 o'clock. So at 10 o'clock right here on the 5, you got a buy that's running, right? So you got a buy over here that's running. I mean, it's not technically running anymore, but if it was, if you got a buy running right there, and then you got to sell here on the 1 minute, I would probably take the shorter time frame one because you can still catch a move within a move. I wouldn't take this one specifically because it's such a small move, but you can have like a quick move like that where it hits your TP, even though it's opposite of, you know, whatever you were taking here. So it just really depends. But for the most part, I would just probably skip it, Jay, because it's just too risky to, you know, pull something like that. But yeah, guys, I think that's it. If you guys have any other questions, you know, feel free to drop your questions here in the chat right now. Otherwise, looks like we'll wrap this up. I've been on the session for a little over almost 2 hours now. So I think that's good enough time for this session. But, you know, just keep in mind, guys, if your question doesn't get answered today, it's fine. We have this every week. So if you have any specific questions or you have any trades that you want me to cover, what I would recommend is make a list. Just, you know, write it down, write down the timestamp for the trade. Write down the question so that next time we have another mentoring session, I can answer the question for you. You know, you guys will get a chance. If you guys don't have your chance today, you'll have your chance next time. But, you know, this session's for you guys. This doesn't really help me that much because I could just be doing nothing, but I'm here to help you guys out because I want to make sure that you guys actually have all the help that you guys need to maximize your probability in doing well with this trading. So I think that's it for now, guys. If you guys have any other questions, let's see. Talanji said, yeah, you probably answered my questions earlier, so I'll watch the live back and bring it up next time if needed. Yeah, no, definitely, Talanji. So yeah, let me check my schedule for next week. I don't know if I have it yet, but all right, so next week I am available Monday and Tuesday. So we'll probably have the mentoring session maybe Monday or Tuesday next week. I'll set up another poll, probably do it earlier, like at the end of this week, so that we can figure out what would be a good time. But yeah, if your questions don't get answered today, or if they don't get answered this week, just keep a note of it and then we'll cover it on the next session. So I think that's it. So yeah, no problem, Lisa, no problem, Miles. Have a great rest of your night, guys. If you guys have questions, always feel free to email me or message me. I actually have a bunch of Telegram messages that I haven't gotten to yet, so I will get to them shortly. So if you guys have questions, I'm going to take a break, but I will get to you guys. I'll get back to you guys within the next hour or so. So other than that, guys, have a great rest of your night, and I will catch you guys on the live session tomorrow.